Good morning and welcome. We are happy to have you with us today for this webinar on export finance with SBA and EXIM Bank. I'm your moderator, Jenny Alton from the New York Small Business Development Center's Central Office. This NYSBDC webinar is hosted by our International Trade Initiative. The NYSBDC is a network of campus-based centers and many more outreach offices located across New York State. The NYSBDC is a U.S. Small Business Administration resource partner. Our free advising, education, research, and advocacy services are made possible by funding from the SBA, New York State, and our host campuses. In a moment, I will turn the time over to Dr. Mercedes Sanchez-Moore, the International Trade Director here at the NYSBDC, and she will further introduce our other presenters, Abigail Martinez with the SBA and Richard Foy with EXIM Bank. So you know, we are recording today. We will share links to a PDF copy of the slides and the recording in a follow-up email. Attendees are muted and will not be on camera. Your chats will only be visible to me and our presenters. If you have questions during the presentation, please don't hesitate to drop them into the Q&A box as they come up. You can open Zoom's Q&A box from the Q&A button at the bottom of your Zoom window. And if you don't see it, click on the three dots for more and you'll find it in that menu. We will address questions in a Q&A session after the presentation materials. And with that, I will turn the time over to Dr. Sanchez-Moore.
Thank you, Jenny, for your kind introduction, and welcome everyone to our webinar, Export Finance, SBA and EXIM Bank. I'm going to provide a brief introduction of the New York Small Business Development Center on our international trade program, as well as the new program that we are launching is a food pilot that is already taking place. The New York SBDC is a partnership of the U.S. Small Business Administration, SUNY, the City University of New York, New York State, higher education institutions, and the private sector. The SBDC provides one-to-one business advisement, training and research in support of entrepreneurship and economic development for the state of New York. The International Trade Initiative is a special program within the New York SBDC network, which is housed on part of the SUNY network of around 20 regional centers and 72 outreach and satellite offices. 98% of the population in the state of New York is within 30 minutes of an SBDC service location. The New York SBDC International Trade Initiative supports SBDC clients statewide with expertise and experience on international trade and trade compliance. We also provide SBDC staff with professional development, increasing trade advising capabilities statewide. All of our services are free, customized, and 100% confidential. We help small and medium-sized companies become globally competitive by providing export development and import operations assistance through one-to-one trade consulting, market research, innovative training, and links to additional export resources provided by our partners, Global New York, the U.S. Commercial Service of the Department of Commerce, the Small Business Administration, featured here, EXIM Bank as well, and other public and private organizations. The New York SBDC can help your business become a successful competitor in foreign markets by helping you plan and implement your export strategy. Our international business consultants are available to assist retailers, manufacturers, high technology, and even service companies with export planning and other areas such as export readiness review, export business plans, targeting international markets, selecting sales and distribution channels, legal considerations and licensing, logistic procedures and documentation, market research and trade statistics, and international financing options. And now, it is my pleasure to introduce our first speaker of today's webinar, Abby Martinez. Abby is the Export Finance Manager for SBA's Office of International Trade, serving the New York and New Jersey markets. In this role, she is responsible for business development and lender outreach efforts. Prior to this role, she was Regional Director at the Export-Import Bank of the U.S. In addition, Abby has over 25 years of experience as a trade specialist in the banking industry, working at global, regional, and community banks. Throughout her career, she has specialized in traditional bank and trade finance solutions. She has worked directly with government guarantee programs, as well as insured receivables financing and supply chain financing to provide solutions to exporters on ways to grow their international business and maximize their working capital. In addition, Abby was previously appointed by the Department of State as a District Export Council member for South Florida for 6 years and served as a treasurer for 2 years. Abby is bilingual and earned a bachelor's degree in business administration from Florida International University with a double major in international business and management. Abby, please go ahead with your presentation.
Thank you so much, Mercedes, for that introduction and for the invitation really to speak today to the attendees. As Mercedes mentioned, I am Abby Martinez, and I am the Export Finance Manager for the New York and New Jersey markets for the Office of International Trade at the U.S. SBA, or Small Business Administration. Make sure, there we go. Okay, our mission here at the Office of International Trade is really to increase the number of small business exporters that we support, thereby increasing the volume of U.S. exports. We basically want to be able to help you compete in the global marketplace. Like myself, we have other export finance managers located throughout the states, and we're here to help provide local training and support to lenders on SBA's export programs, as well as provide training to small business customers so they can access the working capital they need. So some small businesses may have some challenges in obtaining a business loan, especially when you're starting out. Some banks may not want to lend you money. They want to see that you can be assured, or they can be assured that you can reasonably repay the debt that you're asking for. So some of the banks look at the different 5 C's of credit in order to provide you with a loan. And one of those is character, the other one is capacity, the other one is capital, collateral, and conditions. And all of these really are the way that banks underwrite their companies to determine whether they would be able to provide you with a loan. Now, in some of them, the credit history, or I should say your character, your credit history, maybe your credit score, all of these have different ratios or different qualifications that a bank looks for. And in some cases, you may not meet them all. Well, that is the reason why the benefit of the SBA loans are great, because we're not here necessarily. Oops, I think I passed. Let me just go back. There we go. So we're not here to lend directly to companies, but we offer banks a guarantee so that they could use it and they could be incentivized by that guarantee to help provide you with that loan. We basically look at it as a credit enhancement. So sometimes when a bank has your loan package, and let's say your credit score may not be exactly where it should be, the SBA loan guarantee helps with that. It also helps with your capacity or your capital. Maybe you don't have enough equity or enough of your own skin in the game in the program, right? So definitely this helps to provide the lender with a little bit more self-assuredness that you would be able to qualify. Maybe you have collateral, but you don't have sufficient collateral. Again, that's where SBA comes in. And also, SBA can provide maybe a longer maturity or longer tenor, maybe sometimes even better pricing than a regular conventional loan. So those are some of the reasons why lenders use SBA loans. So what are some of the eligibility requirements to be or to qualify for an SBA loan? Well, of course, you have to be a small business, but you also have to be basically established here in the U.S. The loan proceeds have to benefit your company here in the U.S. We do require that the company be owned by 51% U.S. citizen or legal permanent residents. And we do have a whole list, and that's just some of the ones that I can think of off the top of my head that I have on this slide. But we do have a whole list of eligibility requirements on our standard operating procedures, or our SOP 5010. And that's in our section A. And that's where those additional requirements can be found. So SBA has different ways of defining an exporter and really kind of understanding the dynamics of what a small business does in order to qualify as an exporter. So basically, an export is when you have a sale of a good or service to a foreign buyer. In this case, we have three different ways you can do that. So you can have a domestic to foreign exporter, meaning that you make a product here and you export it overseas to your foreign buyer. Or we have a foreign to foreign exporter, which basically, let's say you source your product from China and you export it to Spain. But the invoice that you are getting repaid from is from Spain, right? So foreign to foreign. Okay. And then we also have what's called an indirect exporter, where maybe your customer is another US company, but that US company is taking your product and maybe adding it to maybe other complementary products or adding it to a finished product. Maybe you're just a small component of a machinery or something like that. And so therefore that company then exports that product. So that would be an indirect exporter. So we here at the Office of International Trade, we want to make sure that you're not alone when you're selling globally. SBA has many solutions for the small businesses and really to help you face some of those obstacles or some of those challenges that you may be facing or that may be holding you back. So the Office of International Trade actually mirrors exactly what SBA provides as a whole. The only difference is we focus on those global opportunities. And we have three different ways to support your export business and your export initiatives. And the first one is through our state trade expansion programs, which is our STEP grants and funding, also through our counseling and technical assistance, and also through our export finance solutions or trade finance solutions. So, of course, the first way is through our grants, and that is through our state trade expansion program. And this is for established small businesses that are new to export or current exporters that are looking to expand into other markets. And what this provides is it provides financial awards to our partner organizations, and in this case, Global New York, to help with assisting those small businesses with their export development plans, right? So whether you want to if you want to attend a trade conference, right, or a trade show, if you want to take your marketing material and translate it, if you want to optimize your website because you want to have it in a different language, maybe translation of that website, etc. All of that could be used with our STEP funding. Another way that we help exporters is through our counseling and training. And we mostly do this through our district offices and through our partner organizations, as you see here listed is the SBDC. And they provide local counselors to help businesses get training, assistance, create business plans to either start, grow, or expand your business. Like some of these organizations that are mentioned here, international counselors are at each of these organizations, whether they be federal, state, or local resources, that they can help you build your business. I will say that out of all of these, the US EAC, which is the US Export Assistance Centers, is where most SBA export finance managers, such as myself, we usually sit in those USEACs, and they're usually cohabitated with other federal agencies, such as the Department of Commerce and EXIM Bank. So the third way we provide assistance to our exporters is through our loan programs. So let's say you're just getting started and you would like financing to attend a trade show, maybe improve your website. Again, it depends on your financing need. Maybe a microloan program would be beneficial to you. It may be exactly what you need in order to get started. And most micro lenders do provide loans loans for up to $50,000. We also have some community advantage lenders, or CDFIs, that can provide loans to $350,000, and I believe that's going to be changing to $500,000. So that I'm very excited about that. And then we also have our 504 real estate loan programs for owner-occupied real estate purchases, or for equipment financing. But whichever path you decide to choose, I would highly suggest that you build that lending relationship as early as possible, because this can help you in the long run to be prepared for when that export opportunity comes knocking. And here we have some of our export loan programs. So once you've been established for at least a year, we do have these following export loan programs available for companies that meet our SBA exporter definition. These loans are provided by our lender network. And I would like to highlight that for fiscal year 25, no SBA fees are being required for loans of $1 million or less. So that's a very great initiative that we have. And I will be going into each of these programs in the next slides. So our Export Express is probably our most flexible program, because it can be a term loan or it could be a revolving line of credit. The line of credit does allow for the issuance of standby LCs with only 25% cash collateral. The use of proceeds could be for export business development, working capital. Really, this type of loan does not need any type of finance, any type of monitoring. And it does allow, or it does require, that you fill out a questionnaire that basically lets us know what are the markets you're selling into, who is your customer profile, and what is the product that you're exporting. Again, as highlighted, no SBA fees are required for any loans under $1 million, which this would qualify. Our second program is our international trade loan. This is a term loan for capital expansion or capital CapEx, or capital expenditures that you may have. You may want to renovate your facility or expand your facility. You may want to do so in order to increase your exports. So that definitely does help. This loan would definitely help you with that scenario. It does allow you for up to 10 years of financing, and it does allow up to $5 million in financing. For this particular program, an export business plan would be required. Another one of our export programs is our Export Working Capital Program. This is a loan, or actually, I should say, a line of credit that could be issued for up to $5 million. The line can be either asset-based or transaction-based. Asset-based meaning that it's based on your inventory and receivables that you have on hand, and that inventory and receivables the inventory could be work in process, finished goods, or raw materials. And your receivables are any of your foreign receivables that you have on hand. Usually most banks shy away from lending to companies who have foreign receivables on their books. Therefore, this would be ideal. You also have transaction-based lending, which, let's say, normally you've done all your business domestically, and now you've got this one contract that is international in nature, that could really move the needle for your business. We can definitely help you with that contract. We can actually provide you with purchase order financing for that contract of up to 90% advance rate on that contract, or 100% of your cost of goods, whichever is less. Definitely that's something that the bank would structure for you, but it is something that is doable under this program. Both of these loans can provide for the support of LCs under these programs. So that's another good thing. Now we have our new SBA 7A Working Capital Pilot Overview that I'm going to talk about. And again, this is a new loan that we have for up to $5 million. It is a line of credit that is required It does allow for lenders to issue this line for up to 5 years. Usually they will issue it a year at a time, sometimes 2 years at a time, but you can go up to 5 years and then reissue it. If your bank is a 7A lender, they can go ahead and proceed with providing or submitting applications to us immediately. They do not need any additional agreement or anything from us in order to do so. Typically, a lot of our export programs do require lenders to have a certain agreement with us, but in this case, for the 7A Working Capital Pilot Program, they do not. They just have to be willing to do the monitoring, and you, as the exporter, need to be willing to provide the monthly information that is required. There's both financial information and a borrowing base certificate that would be submitted, either on a monthly or quarterly basis, depending on the amount of the loan. Again, I just want to recap our services, our STEP program, our counseling that we have available, as well as our trade finance solutions. And we are here to help you with your export journey. And again, if you have any questions, I have provided my contact information on this slide. Feel free to reach out to me directly. And I want to thank you for your time today, and I look forward to helping you with any needs you may have. Thank you.
Thank you, Abby, for such an informative presentation. And now it is my pleasure to introduce our second speaker of today's webinar, Richard Foy, Regional Director, Northeast Region of EXIM Bank. As Regional Director of EXIM, Richard has responsibilities for outreach and education from New York to Maine. He works with exporters, lenders, and industry leaders to ensure that the bank's programs are understood and utilized. Prior to joining the bank, Richard was with International Finance Group, where as VP of Commercial Lending, he provided access to loans by working with various funding sources to meet the needs of his clients. Prior to this, Richard worked in underwriting ocean marine cargo insurance and has an extensive logistic background with over 20 years in the field, holding positions in operations, risk management, quality assurance, and environmental affairs. Richard, please go ahead with your presentation.
Thank you, Mercedes. And thanks for allowing me to present today. It's always good to have the opportunity to explain what EXIM is, who we are, how we can service the exporting community. So I'll start with that, who we are. We were established in 1934 as part of the New Deal. So the reason behind that was to support jobs. We wanted to grow jobs by supporting exports. So I plant that there so that you understand some of the requirements and how we look at exports, which is slightly different than the SBA does. And we'll get into that. We act as a gap fill in the market where the private sector is not quite comfortable with a deal, but it will service the exporter to help them grow. We want to be able to foster that deal and make it happen. So we are the official export credit agency of the United States. We're very involved in exports and funding for variety. We have MOUs with different countries where we want to focus on exports too, and so on. We operate out of 12 regional offices. I'm based out of New York, and my area of responsibility, as Mercedes said, is New York up to Maine, so the Northeast. Some of the ways that EXIM can help is improving your competitiveness by ensuring your receivables on international sales. We'll go into detail on each of these. We can assist in obtaining pre-export working capital, very similar to what Abby reviewed before. And we can also support capital equipment exports by assisting with term financing for your foreign buyers. So if you have some capital equipment that is expensive, they can't pay for it in short term, 30, 60, 90-day terms. Maybe they need 1 year, 2 year, 5 years in which to pay it. We can provide that financing directly to that foreign buyer. which helps in your competitiveness as well. So we're trying to level the playing field, make sure that U.S. exporters are really competitive in the global marketplace. Some of the needs that exporters come across, of course, is that they need working capital. They need funds to fill the orders that they get, right? In many cases, they need to extend open payment terms to their buyers. The buyer can and is willing to buy a certain amount of product, but they need 60 days to pay that invoice. There's inherent risk with that, and we'll go over that. And like I said, foreign buyer financing. So we'll go through each of these programs. But first, I just want to say that even though you may have heard of EXIM Bank as only supporting big deals, Bank of Boeing, you've probably heard, or that we provide financing for GE and Caterpillar and all these big companies. It's absolutely true. We do. In fact, Boeing aircraft, the small business supply chain that feeds the build of an aircraft is unbelievable. But aside from that, the majority of our transactions are actually for small business. Over 50% are $500,000 or less. These figures on the screen are from 2022. I need to update those, but the parameters are pretty much the same. The majority of our work is for small business. I work out of the Office of Small Business, so a lot of the lending needs, from a size standpoint, we'll explain this, ends up with SBA, and I'll go over that because it's important to note. Minority business owner outreach. We're very interested in making our programs available to those that have not historically been marketed to or educated about our programs. So the underserved community, if you will. We want to make sure that everybody has the ability to access our programs. So we do a lot of outreach in that regard. But we'll go through some of the export challenges that people come across. Of course, they need pre-export working capital. So you have a situation where you have an order. You've been working with someone, you have a new distributor, and they say, all right, we're ready to buy from you. But you need some working capital in order to fulfill that. With our working capital guarantee program, we're able to facilitate a line of credit or a term loan so that you could fulfill that order. The next step is often in that negotiation, your buyer wants, especially in the case of a distributor, they're going to want some open payment terms. They want the ability to receive the product and turn it before they pay you. And again, there's risk involved for you, but not offering those terms can be limiting for your sales outreach. And the concern, obviously, is will you get paid? So our export credit insurance protects you against non-payment directly. Let's go into working capital loan guarantee. Abby did a great job in explaining what they do, and it's very similar in terms of these are government guarantees. I want to emphasize a few points on this. This is a guarantee to a commercial lender that's making a loan to an exporter. All right. In our case, the use of funds has to be for the procurement or production of the product for export or service. So if you're a service exporter, we can certainly support you, but it would be a service done by U.S. personnel. So this is a guarantee to the lender. It's not protecting you. All right. Why do we do that? Why do we give a lender a guarantee? So, and what is it? In case of a default, in case the exporter defaults on the loan, we make the lender whole, generally 90%. Right. So they retain 10% risk to keep them honest, I think, but we do that to incentivize the lender to make these loans in the first place. Generally, lenders are uncomfortable with companies that export for a variety of reasons. We found that we need to incentivize them to make these loans for export. And there's additional value add with our program, and I have an illustration in that you can obtain more working capital with the same collateral base, and that's very important to understand. So we provide a 90% guarantee. This is more lender specific, but we provide a 90% guarantee to the lender. As I said, it can be structured as a transaction specific. If you're building maybe a piece of equipment and you need a draw in order to build that over a period of time, or if you have regular business, maybe consumables that you are selling, getting repaid. That's a revolving line of credit. We don't have a minimum or a maximum amount. SBA caps out at $5 million. We don't have a top line figure. That said, and we don't have a minimum, but lenders will choose which guarantee program, if they need one at all, to use. So, all right, what does that mean? If on the smaller side, smaller loans, they tend to go with SBA, and that's because there's less monitoring involved, um, and they're just better positioned for that. When you get into larger loans where they can justify the monitoring expense and so on, they tend to come to XM. Or if there's a situation where you're likely to quickly outgrow your SBA loan. You have a $4 million loan, but next year you're growing at a fast clip. Next year you're going to need 6 million. It's logical for them to just put you in an XM facility from the beginning, so long as it meets our criteria. The loan supports advances against export-related inventory or potentially export-related. So if you can sell inventory overseas, that's eligible, and we can advance on that. The process is pretty simple in that you go to your banking relationship. You ask them for a working capital facility. Usually they'll say, well, we're not comfortable with a credit. We need some sort of there's a collateral shortfall or whatever. And hopefully they will understand that they have access to EXIM Bank and be able to facilitate a loan for you. More often than not, I just get a call from exporters and they say, my bank can't make a loan. And I'll have to get involved and speak with their lender and facilitate that. And I'm happy to do that. So this is a great slide that it illustrates what a bank will typically do with collateral, and then how EXIM Bank and SBA as well, this applies to SBA, really can be transformative. So we have, $1 million here on the left side of export-related inventory, raw material, WIP, and finished goods. Typically, banks will advance at a very low rate. Raw materials, 20% top end. WIP, work in progress, they won't advance anything on that. And a finished product, they'll advance 50%. Open foreign receivables. So now we're talking about the accounts receivable that you have. Open account receivable that are foreign, banks won't advance typically. If it's a letter of credit backed, then they'll advance about 70%. So you have $2 million in assets collateral, and the bank will offer you a $760,000 credit limit, maybe, right? EXIM Bank, though, we can increase those maximum amounts to 75% on raw material, on WIP, and finished product, right? So now that's really bringing the leverage of that export inventory up. 90% on your accounts receivable. So we're going from this with the same collateral, $760,000 credit facility to almost $1 million more. 1.6 million. So that is really key when you're looking at a working capital facility. It's more than just can I get the loan? It's what is the structure of the loan and how can I best benefit? Because if you're able to get this loan, $760,000, well, you want to be able to get more because you're going to be growing, you're going to be having larger orders, and you need to fulfill them, right? So our programs really do cover the spectrum from pre-export finance, which we just covered, to post-export financing. What does that mean? That means receivables. You have to get paid, right? So export credit insurance is an excellent tool to help protect you. I said before that the loan guarantee is designed to protect the bank. Okay, in case you as the exporter default on the loan, we're there to make the bank whole. Well, surprise, you're still expected to pay that loan, even though it's a default. We're still going to be, on you. So let's try to avoid the reason for you to default on a loan, which is make sure you get paid on your receivables, right? So with export credit insurance, you're able to confidently offer credit terms to your foreign buyer, knowing that if they don't pay you, EXIM Bank will pay you. All right. You're going to get that money. You're going to be able to pay your loan back. We cover you at 95% on our multi. So there's 90% guarantee the bank gets. We prefer you 95% coverage. Okay. It allows you also to be competitive in the market. When you're working maybe a trade show or whatever, these buyers are going around and they're pushing everybody. They want the best price and the best terms. And if you're unwilling to offer terms, best case, they love your product so much, they're going to buy your product. But the order size is going to be significantly limited because they can only buy based on the cash they have on hand, not the market potential for your particular product. So if you're able to push your product out to the market, get it sold, and then they're able to really really build up a market for your product, and the order sizes will increase. I see it all the time. A standard that I see, people that are changing from requiring payment in advance to open payment terms, same customer base, their order sizes, order sizes grow by 4 times. That's huge because they're not limited anymore, but these distributors are not limited anymore by the cash they have on hand or tapping into their line of credit. This is another great illustration, I think, on how to view the relationship. Okay, the seller is, I'll say, you guys, the exporter. You require cash in advance. That's low risk for you. That's why it's green. The next one down, though, is a buyer's risk, and it's high risk for them. They're sending you money and hoping that you send the product to them, right? Then you have other banking tools in between. You have letters of credit. You have cash against documents and other ways to help mitigate the risk. Ultimately, though, the preference of a buyer is to buy an open account. You can see that's low risk. But for you as the exporter, it's high risk. Now you're sending your product. You've maybe borrowed money on their behalf to make the product, and now you're hoping that you get paid. I always say, if you borrow on behalf of your customer, you better insure against the credit risk. But in this case, you're in a great position competitively if you're able to offer excellent terms for them to buy your product on. It's a pretty simple process. When you negotiate the deal, you bring it to us, we underwrite the buyer. We look at the buyer and we say, yeah, okay, they're good credit risk. We can extend, we can insure up to whatever, 500,000 for 90 days, and whatever it is that you're asking, that's within reason. You don't have to do anything additional. Once we approve that buyer, you record the shipment every month and you pay the small premium. But as far as documentation for your orders, you don't have to do anything else. God forbid they don't pay. Then you request them to pay the invoice. If they don't, you file a claim with us and we pay you. So it's risk protection, it's a sales tool, and it can also be a financing aid, because go back to that other slide where where foreign receivables were not eligible for a bank. When they are insured, they're a great asset. Banks love to lend against. The two areas that are covered: commercial risks. So we're talking about insolvency, bankruptcy, and protracted default. So if they're not paying in accordance to the contract. And political risks, which are often overlooked. And so we're talking about war, revolution, insurrection. And the way the world is now, that's key. Currency transfer risk. We have a lot of situations where a buyer wants to pay, but they can't get US dollars out of the country, covered cause of loss. Or the cancellation of an import or an export license. If you have freight on the water and They can't receive it because the license has been pulled, the import license. This is another covered cause of loss. We have three basic structures for our policy. We have a multi-buyer policy where the expectation is that we provide coverage for your entire export portfolio. Keep in mind, EXIM Bank doesn't handle any domestic. We only are involved with the exports from the U.S. So any invoice where you are advancing, providing credit terms rather, not obviously when you're getting cash in advance, we expect to cover that. We have a multi-buyer select risk policy. Some customers want to carve out particular areas of the world. We can accommodate that. And then we have a single buyer policy. If you only have one buyer that you're concerned with, or just one buyer, you're just starting off, maybe it doesn't make sense to get a multi-buyer policy. You cover that one buyer under this policy. Since we have a concentration of risk, we cover that at 90% rather than the 95%. There's never a deductible on these policies, and the premium structure is pay as you go. So if you don't have any shipments in November, well, you don't pay any premium. December comes around and you go gangbusters and you have a lot of shipments, you record those shipments in the portal. The following month, you pay the premium at that time. It's very simple. So the expense of the insurance always follows the sale. And finally, our medium-term financing program, this is for capital equipment sellers, manufacturers of U.S. Equipment. This is where they need multi-years maybe to pay for this equipment. We facilitate a loan very similar to a working capital facility, but we facilitate a term loan with a U.S. lender directly to that foreign buyer. So now on the credit insurance side, you've exported your product. You're waiting for payment. You're holding that receivable on your books, right? Here, once you export the product, you show proof that it's exported, you get paid. The lender holds the note. Okay, so this is a way, and this is for larger deals, under 25 million, but for larger deals for sure. Some restrictions. EXIM Bank can't handle military or defense related products or obligors. We're not in the, we can't support any defense. The product, unlike the SBA, which they allow foreign to foreign, must ship from the U.S. And we're open in over 180 countries. We have a country limitation schedule on our website that identifies where we're open, where we're not open, or where maybe there's an additional note to be considered. And that's what I just said. Eligibility: products must ship from the U.S. They have to be 50% or greater U.S. content, including labor and overhead, but not any markup. So this is your cost, but you're all in cost on that. For our loans, we look for a 3-year operating history and a positive net worth. You have to have a DUNS number as well as a unique entity identifier for us to work on a credit insurance program. We have people on staff that actually help you get or straighten out your UEI number, so that's not an issue. I wouldn't not contact me for something because you don't have a UEI. Contact me, I'll help you through it. This is the most important slide. I think we're sharing these presentations, but these are my contact. This is my contact information. I invite anyone to call me just to discuss your business, what you're thinking about doing, what you are doing, what your needs are, your anticipated needs are. I might not be able to help with every one of them, but I have a large network in this area, and I will certainly plug you into the proper resource as I see it. And with that, I'll turn it over. I think Mercedes has another message for you.
Thank you, Richard, for your presentation. And I wanted to highlight that all the companies that are participating, the food companies participating in our pilot, meet that 50% threshold that you require. So that is very good for them. And if you're so kind, Jenny, can you please show the flyer? I know that we have among them people that are viewing this program they are already participating, and there are some that I'm trying to contact as well to recruit them. We have an excellent program that assists food companies with value-added products. You can see here the dry grocery, beverages, confectionery, chill and frozen products as well, to find distribution channels in Canada. Now we are partnering with Food Export Northeast and also with Global New York. Abby was talking about the STEP grant that is funded by SBA and distributed, administered by Global New York, and those are the funding sources. So you see here that they are cost-share funding opportunities. So you can actually pay for more than, for 50% of marketing cost, and people can contact me and I will let them know what these costs are that are included. The best thing is that they are also able to finance the attendance to one of the 4 trade missions or trade shows of their choice that are listed here. And we are also going to attend the Salmon Farce food show in New York City. What is the advantage of working within the pilot? Meeting with Food Export Northeast and Global New York, they do have consultants that are placed in Canada. So you have the ability to talk with them directly, obtain market research. We do searches for any sort of regulations that affect your product. We help you with understanding label, packing, regulations as well, because everything has to be bilingual in the metric system. We will also give you information about the demand that exists for your type of product, etc. So if you're a food company, I certainly will encourage you to contact me and enroll in the program. I'm very sorry. We do have 19 companies. We we wanted to have at least 20, but we are going to open up for 23, 24 because there is always attrition in the group. So please contact us and I will explain this program with more detail to anyone who is interested. Thank you.
Thank you, Mercedes. And I dropped the link in the chat for anyone who would like to access this flyer. You can go to that link and download it if you would like to have a copy. All right, so we had a really great question come up during the presentation. And I know, Abby, you had a comment on that, so I'll let you go ahead and do this on camera so that we can capture this for anyone who watches this on replay.
Yeah, absolutely. So one of the questions was, how can you access any lenders with the programs that I mentioned? And in actuality, we have a portal that you can go to. I've put the link in the chat here as well. On our SBA website, if you type in the search bar lender match, you can then go ahead and enter some information, some brief information about your company, where you're located, what you're looking to do. It even gives you some pointers of what to have ready and things of that nature. And you can then request or put out there your situation, and any lender within our network, and I think we have like 700 lenders. And by lenders, I mean not only banks, but some of them may be finance companies, some of them may be micro lenders, some of them may be organizations, CDFIs, Community Advantage. So they're all of our network. They will respond to your inquiry. And when they respond to your inquiry, you could have it so that you could either have them reach out to you directly, or that you just get a list of their names and then you can reach out to them directly. So, but either way, that lender match portal is on our website. And I stress that because I know there's other lender match portals out there that are not from SBA. So I want to strictly mention that this has to be the SBA lender match portal. And if you go in there and look it up, it'll provide you some great information. If you're just looking for some micro lenders, you can also just go to sba.gov and the search bar, put in micro loans, and you'll see a list of micro lenders for your particular state will come up. It'll ask you for what state do you live in. You put in New York, it'll give you the list of New York lenders or micro lenders that are available as well.
That's awesome information. Abby, thank you so much, because I know that many people were interested in applying for funding. So thank you.
Yeah, I just want to add one point to that. We always encourage you to go to your current banking relationship. And we see regularly where the folks that you're dealing with locally may not be up to speed on our programs because they are, you know, they're export specific, and these relationship managers don't see exporters walking through their door every day. So it's important if they say, no, we don't have any sort of product like that you contact one of us, because that's an opportunity for us to get in there, educate them, bring them up to speed on their program, or get you to the appropriate resource. Don't just walk out frustrated and go down the block to a different bank. The relationship with your current bank is so important, and they should want to support you and your business growth, and they more likely than not will, provided everything matches up. Going into a new banking relationship can be problematic. They have a lot of regulations, know your customer, and so on. So if you can stick with your current banking relationship and get satisfaction because we're able to help you, all the better.
Fantastic. Thank you so much.
Yes, and we have a few more minutes with Abby and Richard. And so if you have a question, please drop it in the chat or the Q&A box so we can get you an answer from the experts that we have with us for a few more minutes. So we'll give people just a minute to put things into the chat or the Q&A box. And while we give them a little bit of time, I do want to mention that in a few minutes when we shut down the webinar, you'll see a survey, and we would love to get your feedback on today's session and how else the NYSBDC can assist you. So we'll just give people a minute more here. In the meantime, Abby and Richard, any other tips that you would like to share today that you have not already covered in your presentations?
I think Rich mentioned it already. Really, if you have any questions, feel free to reach out to us. Feel free to reach out to the SBDCs as well, your local SBDC. That's really kind of like the starting point for most companies, and they have access to us, both me and Richard, and they have access to the Department of Commerce and so many other agencies and resources that are available. I would say, reach out to any of us. I think, we also mentioned, any door, what is it, there's no wrong door, right? So no matter whose door you knock on, if you got confused and you asked me about, does my product have to be, US made? Well, no, it doesn't, but if it is, I could always refer you to Richard, right? So there's no wrong door here. We can always refer you to the appropriate person. I think that's the biggest takeaway.
Well, I'll just say one thing. I was in a hotel 2 weeks ago, and I was given a key card. And when I opened the door, somebody was in. That was absolutely the wrong door. Somebody was occupying the room. So in that case, it was the wrong door. But generally speaking, yeah, I agree. No wrong. I want to say one thing on the credit insurance, because many people that I speak to, they just in their mind, they think, well, I'm only dealing with small orders. It's not worth it, that type of mentality. I think it's so important for people to understand that we don't have a minimum amount. So if you're sending a small shipment out, think about, if you don't get paid on that shipment, how many additional sales do you have to make up for that, right? Even if it's $1,000 shipment. Well, all right, what's your margin? Now you have to sell, whatever, 5,000 more dollars in sales. So if you think about, what do I need to make up if I get beat on this invoice, I think that'll clarify the need for credit insurance. And as you're starting to export on open payment terms, there is no reason you should be taking that risk on yourself. You have a government agency here that will protect you. Our objective is to make sure that you are in business long term, that you're able to grow your business. And if you start getting beat on invoices, you're not able to pay your bills, you're not long for your business. So we want to make sure that you're executing on every opportunity that makes sense for you, and that you're getting paid. So keep that in mind. There's so many government resources available for you, from federal, state, local, to help you export more. Absolutely keep in touch with everybody on the screen now, because we can plug you into those resources, and new ones are coming on board, like, I don't know, every 6 months or so, something new.
And besides, the cost is truly not that high at all. Pennies to the dollar, no, Richard?
Yeah, our I'll say our most expensive is 65 basis points for our multi-buyer policy. So if you have a $10,000 shipment, it's going to cost you, what is that, $650 or something, 65 bucks. I don't know. My math's not that great. You can do the math. 65 basis points on 10,000. It's not that expensive. And when you're thinking about not getting paid at all, and growing that pool, those receivables, as they're insured and they grow, well, your borrowing base is increasing as well. So when you get that big order, now you do have collateral to pull from, where maybe you hadn't in the past.
Great, thank you. Yeah, $650 to cover $10,000, I think, is pretty reasonable.
Yeah, I think that's actually wrong. Let me just.
We'll give Richard
Yeah,
a
it's
minute to
65.
do.
It's $65.
65.
Yeah, it's
65,
65.
not 650,
No,
65.
$65. No.
Oh,
And if you have $1,000 order, it's what? I don't know,
$6,
whatever. I don't know.
oh my.
No deductible, pay as you go. This is like this is a
It's
no-brainer.
no-brainer. It's a no-brainer. Yes,
Yeah.
to utilize your
So I know my
credit.
phone's gonna start ringing real soon.
Mercedes, is there
Sorry?
anything you wanted to add before
No,
we shut down today?
just to let Richard know that I will be contacting all the people that are registered for the food pilot, and I would recommend that they give you a call, and
Thank you.
they start an account, and they start using the. I have a company in mind, and it actually is a very large company, so they will be very happy to get in touch with you.
Wonderful. Happy to speak to anyone.
Yes,
Wonderful.
Thank you so much, guys. It's been wonderful.
Yes, thank you so much, Richard and Abby, and thank you to everyone who joined us today. Again, please, if you have a moment, we'd love to hear your feedback in that survey, and we will wish you all an excellent rest of your day. Bye-bye.
Bye bye.
Bye-bye.